Today's the 27th of November 2024. Market seems to be moving a little bit over, or I was going to say overnight, the my day US times night, which has sparked a little bit of interest. I'll see if there's any opportunity to day trade US market for the Wednesday. trend's possibly breaking down. We've got it's rounding off a little bit at the top. You can see that at that high we previously had on the Nasdaq, it started to round off at the top and lose strength. A little bit of that now, where we've got a bit of a double top. It's losing a little bit of strength, so it'd be great if we could make a lower low. We'll have to see whether price pushes through or not. In terms of the trend on the 4-hourly, it's neither here nor there because we haven't made a higher high, so I wouldn't say it's very strong. It hasn't before Trump anyway. There's a lot of uncertainty. That whole move there was on the news that President Trump won the election for the second time in the US and gave back about all of its gains. And from there it made 2.5%, which is pretty dismal, to be honest, compared to what we've had. In terms of strength, I don't really see much at all in either direction. It is an uptrend, but it's not a very clean trend. Put a few of the major levels in, and you're probably best to stick with the major levels. Put a few obvious patterns in. I haven't gone too crazy with the patterns and the key levels because when there's less direction and the markets are more muddy, the more you put in, the more you just confuse yourself because the market's not doing anything. So the odds are the major levels will probably work, but any minor levels are just noise. It's just nothing. Like if your mind might play tricks on you, it's just nothing there. To me, this looks obvious. If price, mouse is working. If price closes there, okay, maybe it's not obvious. Just going to copy and paste that one. Put 1.9. So from there, that would. I'm looking for about 1%. 0.8. I'll take a 0.8. I'll take a bounce at 0.8. Looking for a break and retest. I'll take that. I mean, it looks like the market could pull back to this. It's a major supply and demand level, but that's I don't like to trade around them. It's because you don't know how it's going to get there, and because of the recent volatility has been quite low, I wouldn't expect it to go any lower than this. So yeah, we kind of need to let the market make its mind up. There may be a small trade, which is what we're looking at here on the Nasdaq. The Nasdaq should sell off more if the market does sell off, which will give us. I mean, a bad day of the market for the Nasdaq is 2.5%, so that will take us down to weekly level. That is possible, you know, and that'd be quite a good trade. But you know, we don't know how it's got to get there. Three to one. If we get a good break and retest, oh, for 3-1. Yeah, that's good. So we could grade the probability. Oh, we've got to grade them. Okay. I'll grade that one. It's an 8. Normally I'll put more probabilities in here, but I just don't see anything else. It needs to be obvious. Once price reaches the target, like say if it reaches here, what it's going to do. If it doesn't close below this key level, the 4-hourly key level, it's probably nothing in it. And it could do all this before market opens as well. So it's one thing to predict the market perfectly. It's another thing to know how to handle near misses. Okay, looks good to me. Game plan. Candle strength on the daily. I like to look at the daily candle strength. And it's looking bearish that's the Nasdaq. And I'm also noticing it could be a bit of a wedge pattern, which is typical with uncertain markets. Whenever you're unsure of what the market's doing, always look for a wedge pattern. And by that I mean that. What I don't like about that is that price could bounce at that support level. So we take that down to there. Damn it. So we reach 1-to-1 here, which is there. So if price does bounce, which it likely will, get a bit of volatility at that level. If we try to take a 1-to-1 or lock in 1-to-1, we'll likely be stopped out, missing the entire move if the price does continue. So that comes down to timing, what the market's doing. Say if it's moved at 9:30, we put in, if it moves very quickly, I'd be more inclined to hold. See, it's 9:30, 10. it's a little bit tricky, but we'll see what we can do. 9:30, 9:30 every day. Brilliant. Looking here, just put it just above. This is this. I was going to say this is exciting, but exciting is not what you need for trading. It should be methodically boring routine. That's when you really make some money. But given I haven't been trading for a while, it's because of crap market conditions. It feels good to get back into it. Yeah, so there could be a bounce there, but I haven't put an arrow because I don't see it. So if I had, I wouldn't trade at this level. But I could be wrong. But to be honest, given I'm seeing this wedge pattern, I really it's got to come down to timing, to be honest. Just check the data release. What we've got. 27th personal income. Core PCE price index month on month. GDP growth rate quarter on quarter, second estimate. Durable goods month on month. So GBDP will probably, and the core PCE will probably move the markets a little bit, cause a little bit of volatility. So that they come in at 8:30 US time, which is an hour before open. So that's fine for trading. We want to trade too close to the news. Check if there's any opportunity. See the 1400, which is 2 p.m. Yeah, tried at 1 p.m., which is another opportunity. So we'll put that in. Try 3. I don't know what they do in the US. They obviously go have their lunch and then come back and do a bit more trading. Bull and bear entries. Probably know if you've been following me, you probably noticed that the last day I traded, the market went up and I was waiting for it to go down, and I thought it looked more like it was going to rise rather than fall, and it actually rose and bounced off a level. But psychologically, I was only looking for shorts, and so I didn't trade. So we should put a long in here somewhere. But yeah, what there? Oh man, damn. We've got a double top here. This is on the Nasdaq, and if the price closes down here, that will make a lower low, which will be two confluences, which will be more bearish. I'm liking the double top setup. The market, well, you can see. When was that? The 11th of October. There was a very nice bearish candle. I forget what you call that one. That's very bearish. It's on the 2-hourly. As we stay below that level there, the market's bearish in my opinion. If the market goes above there, the people that's shorting here will have to sell their positions, and the market's, you know, from that point in time, it's free to rise. But we'll be looking at the Nasdaq. See some prettier patterns here. Okay, boom, bear. Okay. Let me show you a trick. We're looking at the inverted chart here. The arrows, what's up is up and what down is down, as Captain Jack Sparrow would say. But it's a little trick I use when I'm mentally biased towards the market, whether it's for personal reasons or just have a belief in the market. You know, I could be wrong, for example, but if you read technical analysis, it might be more bullish, for example. This is telling me there's been a lot of support there. That looks like a major level. It's on the 4-hourly. So again, I think if price can remain below that level, once we get down there, I'll hold. If we can't, I'll take my 1-to-1 if I get an entry. If it bounces at that level there and it shows a strong bounce, that's going to be rather bullish. So actually what's up is up and down is down. So these candles will be the right way up. Trust me when I revert the inverse charts. We can break out of this wedge pattern and break above that key level, which is 4-hourly. And when I'm talking about major levels, the 4-hourly is the minimum that I'd be looking at. I wouldn't really be looking at anything lower than that. Up. can retest. Okay. Very good. The very top. Oh, okay. Two to one. You never know. Hey, Trump might have some good news. You never know. I mean, it could happen. The price makes it all the way down there, I'd be less bullish. Looking more for one for one. Okay, I did tick that off. Against my will, I found two long positions. Bounce, retest. We're looking for structure at the moment. I'm not looking at structure. You find structure more on the hourly sort of time frame. Okay. Again, when we're talking about risk matching market volatility, what I'm talking about is matching the reward with the opportunity or volatility, and also use this for entry speed as well. So if you can see over on the right, we have high volatility, and we're more inclined to see a break and retest game plans or trades, for example, and they're more likely to work when there's more volatility. And when on the left we have low volatility, and there's typically less day traders, and it's harder to make money basically. So what I like to look at is down the bottom I have a sort of slider, and I'll be looking for like a 1-to-1 or less during low volatility, and a 2-to-1 or 3-to-1 risk reward ratio during high volatility. Sure, price could have a higher reward during low volatility events, but the likelihood is probably a lot less. So that's a new addition to my trading, and it seems to be working really well. Again, here this is a break-even line. So if you take all your trades and you average them out, and hopefully you're above the line. This is a break-even line here. So all the trades above here is profitable. All the ones under here is unprofitable. This is 1-to-1. This is 2-to-1. This is 3-to-1 and 4-to-1 and 5-to-1, etc. So at 1-to-1, we need to have more winning trades than losing trades. And so it's pretty self-explanatory, but it just gives you some sort of framework to base your trades off. So if you're running, so if there's more volatility and you're taking 2-to-1 risk reward trades, and you do end up taking some losses, it's to be expected, to be honest. It's the sort of nature of the business. So yeah, so that's just something to keep in mind. And I also use this to go back through and look at my trades. So if my record keeping is showing that I'm trading here, like my win rate's 55%, and I'm taking most of my trades are at a 1.5 to 1.5 to 1 risk reward ratio. But the market, those trades would have given me a 3 to 1. I know that I need to adjust my trading. Yeah, so it's just good to look back over your trades and see where you can improve. Because without knowing where you can improve, you're really trading blind. It's yeah. Okay. High areas of uncertainty. So obviously if price hovers in this middle area, which I'm not expecting it to, if it does that, that'll be uncertain. That'll be unfortunate and frustrating. And uncertainty is a dopamine trigger for over trading, and we don't want that. So I'll choose one of these shades and I'll almost completely block it out. So I know where roughly price is, but I cannot see the candles. Everything else has been working so far. Bring to the front. Yep, it's great. So if you hover over the candles, you can still see it, but it's not in another area you want to be concentrating on. At open, we're actually expecting price to move quite quickly at open. If it doesn't, I'd be surprised. Yeah. Again, all eyes are on the key level and what price does around here. If it doesn't, if price doesn't retest that level, which it may just break straight through, there is a you could say break a structure there. Which price could make a lower low, but because we're in an uptrend, I'm looking for a less riskier trade. So that's why I'm looking for a break and retest. If we wasn't in an uptrend and was going sideways or something, then I'll look for a break low. But I think we have to be risk adverse on this one. But given the speed, price could actually absolutely sell straight through when we reach our target and we miss entry. But again, we've got to manage risk. But yeah. So I'm not putting anything at open because we're expecting, unfortunately, beyond a certain point. Where are my trades? There you are. So obviously if price trades above here or below there, we might actually put, looking a bit messy now, isn't it? Copies. Move this below here. Keep it in line so it's less messy. Price trades below there, it's uncertainty because I'm not expecting it to. If it does, there may be some major news out. This could be a major war breaking out of something, some Ebola or pandemic or something that I'm just not expecting. Or just data, or it could be data to be honest. But whatever it is, it would be uncertainty. I'm not stressed but a little bit tired. So again, we've inverted the charts. So, you know, chronic stress tends to close the mind, and, you know, a couple of negative beliefs on the market, and we just won't see bullish trades. That's why I invert the charts. We need our minds to be open while we're trading, and if our mind's closed, it's just impossible. Now, I also like to get in the flow state. That's why I like to trade within 20 minutes. It's not always possible, but if there's no opportunity or the price is not trading their levels, I tend to sort of switch off and use rely on alarms because I want to be in the flow state. I want to be at optimal performance to trade. So just sit there, Okay, on the iPad I have a countdown timer that I set at the moment I opened trading view. Yeah. The moment I open this, I'll set that 20-minute countdown timer. It's a little messy though, doesn't it? I normally have the charts a little bit darker later, so that's why these are darker to match the background. So I'm happy with that. I might invert it back. I might not. Okay, that's done. So hopefully these videos can get out and help some people, and I can do some live videos at some point in time in the future. Okay, have a great day. Thanks, guys. Bye.